everyone, good morning, afternoon or evening, depending on when you're watching this, and a happy Friday to each and every single one of you. Welcome back to another daily market update. We've got quite a lot to get into. Today is a significant day, certainly in regards to economic data, because it's non-farm payroll and the unemployment figure release. Now, the jobs market is watched by the central banks in affecting their monetary policy. And jobs have typically been a great barometer for the economy as a whole. However, I'm going to show you a really interesting chart to kick things off. We're going to focus a little bit for the first couple of minutes of this daily market update on the broader kind of economic sphere, which we are not separate from. You know, the cryptocurrency space is really a beta for markets that move on often economic data or with economic data. And we believe, based on what we're expecting for the S&P 500 and other stock indexes or individual stocks, that it's going to be a generally good economic environment. In fact, we can even derive that from the belief that Bitcoin dominance is now going to roll. Altcoins are going to do well. That has to be a generally good environment for assets, which the kind of economic scenario has to support, as it were. So we like to say when it walks, talks, and quacks like a duck, it's a duck. And we think in regards to where crypto's going, it's very much that in regards to being a very bullish duck. Let's kick things off. As promised, we've got a lot to get through. We've got news from the ECB. They've selected a number of partners. We're going to look at one of them and what they have to say about Ripple specifically. We've also got tax news in regards to the United States, predominantly affecting kind of treasury companies and their exemption from, I think, corporation tax of 15% on profits made from cryptos. It's a shame they don't do this for the sort of everyday citizen, but we'll see. Maybe that's still to come. And then we'll do a little bit of charting. But to kick things off, today, of course, we have non-farm payroll. And non-farm payroll happens first Friday of every single month. It really kind of kicks off or can set the tone for the month ahead. And we had pretty shocking revisions, which we actually put a bullish slant on, not a bearish one, in line with what we're expecting technically. We had revisions of 911,000 jobs priced out or revised out of the sort of stats over the past 12 months. The prior time we had figures like this was 2009. Obviously, looking at the past 12 months, which was the 2008 sort of crash, as it were, the mortgage-backed security crisis. Now, after that, market did well. We're expecting the same thing today, and certainly we've got technical merit for that, and the revisions really support the fact that I believe we've had our bear market for the S&P 500 and the stock market more broadly, which is technically defined as a 20% plus pullback, which we've entirely engulfed. Every time we've done that, we've gone on to move forwards, or markets have gone higher for minimum a year, typically longer. And we're expecting the same thing. That's a great backdrop for the cryptocurrency space. But today we do have potentially improving non-farm stats to the tune of what is forecast at 52,000. The prior one was 22,000. It's nothing spectacular. We could get a beat on this. The important one is unemployment. Now, unemployment has typically been correlated with the markets. When unemployment has risen, markets have came down. However, we live in a slightly different world to the prior economic one with the introduction of AI and such things. We'll just finish off on non-farm payroll. The you can see the horrific revisions here. The forecast is 50. If we get some improved data here, this could sort of add some buoyancy to the markets. I want to share this extremely interesting chart though. Now, I've often said AI is going to perhaps throw off the correlation between the S&P and unemployment, because essentially a technology is kind of replacing those human beings and economic models, and it's a new kind of economic world perhaps that we're moving towards more generally that we're getting to. But this is a really interesting chart in the sense that it looks at total job openings and the S&P 500. Now, what you can see is a very clear correlation between the S&P 500 and job openings. So if people are opening jobs, it suggests that, you know, business is booming and they need more employees to essentially do that. It can be a barometer for the economy generally. That's certainly been the case up until the release of ChatGPT in December 2022. Now, it was the case that we're following. Then you get ChatGPT and a more broad sweep of AI, ChatGPT perhaps just being one of the predominant ones. And that has seriously thrown out of kilter the correlation between job openings, the labour force as it were, and the S&P 500, as it's kind of a new economic model that we're moving towards. So this non-farm payroll data is very significant still. And of course, unemployment. But the things used to weigh up an economy in a world where AI, a lot of the digitization didn't exist, perhaps might not be as useful moving forwards. And this is a very interesting chart. This is the first I've seen this. This is from a guy called Robert. First time coming across this guy, a macro nerd apparently, but this was this chart gave me a lot of thoughts in regards to the world that we're moving towards. And that's the beautiful thing about being a technical analyst is it doesn't just give us an insight in regards to the price of something and where we believe it's heading, but the world more broadly. And I'm telling and have been telling people that there's a major shift coming as far as the monetary order of things in regards to the world at large, based on where silver could be going, where gold's going, where Bitcoin's going. Yesterday we spoke about how everyone calls for $1 million Bitcoin, but what does the world look like in that context? Well, it likely means fiat devaluation, which essentially is, or what's taking place right now is a financial rapture, where if you've got assets, you get to kind of go up to heaven, and if you don't, and you're in the sort of fiat kingdom, you get left on earth to deal with the 7 vials or however many vials there are that are laid out in the book of Revelation, which essentially means that you're going to be relegated to serfdom. Anyway, let's move on. So very interesting. So today's going to be significant for the broader stage. The market's a little bit hesitant going into this. Ultimately, we're pretty damn bullish on the market, certainly in the short time frame. I also think Bitcoin dominance is about to roll, which sort of aligns with some of the smaller technical patterns that we have on the altcoin sector. Let's get through the news before we start to talk about things technically. This is from Mary C. Hall, who is an award-winning blockchain and CBDC product marketer, building the next gen of central bank infrastructure. So top 10 women in blockchain. She tweets this: breaking the digital euro moves closer to reality today as the ECB selects digital euro service providers, featuring, I'm not even going to try and say this, and this of course is the release. So the digital euro is ever closer. Last week or a couple of weeks ago, we looked at what Christine Lagarde was saying about the digital euro specifically. Or the embrace of crypto to essentially enable this economic boom. And you can see this literally just came out yesterday. The interesting thing is with one of those service providers, they did release a report, Global CBDCs and Stablecoin Markets by Juniper. And it's interesting because they have a leaderboard on CBDC vendors. And you can see on the left axis, we've got product and positioning. And on the right axis, we've got capacity and capabilities. And you can see they're here and Ripple is here. It's clearly a leader, and there's a lot going on with Ripple. There was something floating around in regards to potentially Brad Garlinghouse or a letter to investors or shareholders from Brad Garlinghouse in regards to the Swift announcement. I don't know the sort of factuality of that, so we're not going to post it, but this was very interesting. But more broadly, the euro moving in the right direction. This is from Coin Bureau. Breaking: UK Treasury exempts Bitcoin and crypto from 15% corporate minimum tax. So nothing for the kind of peasants, as it were, but the corporations for sure. And you did actually see MicroStrategy. Where's our MicroStrategy? That's Tesla heading back towards our target. In fact, it made a target that we had for it here anyway. But we may see MicroStrategy. I think MicroStrategy sets up continuation to about $900, which I think broadly is going to align with Bitcoin getting to 300 in the broader direction of the space. But you are seeing sort of treasury companies do quite well. We own a number of treasury companies. One of them was up 32% yesterday. Do become a patron and find out what we own. So this is, I think, is generally good news. It also affects miners. Remember, we did look at the miner index. That's progressed nicely since we called this cup and handle, and going to continue to progress. We also own miners that are finally getting rocking and rolling. But the stage is set. All is good. The cryptocurrency space is really ready to rock and roll. I think the chart that I'm looking at the moment right now is Bitcoin dominance, which I think is now in phase 4. And actually, I think this is just going to turn into a bear flag that you're going to break to the downside of. That's going to correlate with altcoins going up. And if you look sort of during this period at how, let's use XLM as an example, one of my favorite alts. if you look at what we're kind of getting here, this might not be the sort of best chart for it. But what you're going to see is a drop here and a rise for these alts. So not only do you have BTC DOM, we'll show you this in a different way, sort of ready to complete a bear flag and move to the downside. We also have a lot of altcoins like HBAR that are ready to sort of break to the upside. Very messy chart. We'll get rid of this. And it really is a matter of time before we see continuation for the cryptocurrency space at large. Now you look at XLM similarly, and XRP. They've all got this kind of three impulsive wedge-like structure forming on them, which I think is ultimately going to lead to a major break to the upside, and that's going to coincide with Bitcoin dominance rolling. So when it comes to the cryptocurrency space, it really is a very clear picture technically, also fundamentally. There's major things happening in regards to an entire rebalance of the monetary order and system. Don't worry, guys, we'll keep you up to date with it every single day here on the channel. We're bulls. We have been. We've very much stayed unwavered in our approach to being bullish due to the things that we're seeing, and we only continue to get further evidence of that since we got back into the markets at the start of 2023. January the 5th was when we made this sort of call, or I made the call to Patreon. And we've been right thus far. Hopefully that continues. No guarantees, but I think the stage very much looks set, and there's a hell of a lot going on. I want to share that kind of economic, interesting thing that I'd found this morning with you, because you have to wonder what the effects of monetary policy are around technologies. Certainly AI, which is going to skew economic data and perhaps not reflect what that economic data previously did. But that's it from me, guys. The stage we think is very much set. All systems go. I look forward to seeing you all in tomorrow's Daily Market Update. Thanks for watching, guys. See you in the next.